into another training.
Yeah,
And you know what? Um, just I know I was it last week or week before, man. I was just kind of sharing some stuff with y'all, man. Even with that that frontier thing I was talking about with the past and everything, man. But well, we just want to be help and support for each other, helping each other in whatever we in every which way we can. And you won't ever see me gatekeeping when it comes to nothing, because my blessings has always come from me being in a in a helping spirit. So let's see what we got this week. I know we always get started with going over the barber when it comes to making sure we stay compliant. So we'll stick with that and
Yes,
get on
sir.
over you, boss.
Here's our disclaimer for Futures and Commodities One-on-One Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
All right. Well, we didn't have no quizzes.
We had quizzes.
No, no, wait a minute. Yes, we did. Yeah,
Two,
got
I
two of
believe.
them.
Yes. Let's see. The first one is what type of order do we prefer to use when we are looking to enter a trade? What type of order do we prefer to use when we are looking to enter a trade?
Which one do we prefer, Bob?
Yes.
Come on, y'all.
Limit.
What was
limit
that, Pam?
order.
I'm set limit.
Yeah.
With
Limit
Jamal,
order.
what you say?
Limit order. Yeah.
Or anybody feel different or think different? All right, what you think, Bob?
Limit it is. We prefer for the market to come to us.
All right. All right. Good job.
All right. Quiz number two. When placing a trade, you place your order to buy a futures contract at the current price. What type of order is it? A.
Market order.
Limit order. B. Order
Yeah.
in the court. C. Stop loss. D. Market order. E. Not sure.
Market
Jamal
order.
said market. Pam said
Tomorrow
That's
only, man.
market.
Market.
Market,
yeah.
yep.
Current price.
And John said market.
Anybody think different from market? All right, Bob.
Market it is.
Like they understand.
I think they got it. All right.
Okay. Let's jump on in. See what we got. Let's get going. I don't know why I feel like we skipped a week. We did have a call last week, didn't we?
Yes, sir. We did. Um, tonight's lesson is lesson 8. This is March 15th. It's on support and resistant levels, along with talking about open interest and volume, volatility, and trend lines. This lesson can be found in lesson 3 and 6 in the Manual of Futures and Commodities 101. All right.
Is
We
it
got
April yet?
Have we
it's
done the
almost
disclaimer?
it's almost here.
Yeah.
Yes, sir, we did. I did that first. Yes.
Man, it's April, right?
It's
Oh, we
almost
still
It's almost April. We don't got too much longer. We got this retreat coming up.
Man, y'all need to get to Arizona. I'm looking to see y'all. But we're gonna have a ball. We're gonna have a ball. So we ain't gonna even say much about this. Y'all already know about it. You know how much it means to me. But it's my favorite time of the year when we see each other in April. So get registered, y'all. Look up them flights. They got some good flights right now. And always know that you can reach out to Barbara if you need any assistance with getting registered. Most important thing, y'all, is that the strategy that we're gonna be talking about and covering at this event is something you can't get out of the book on these calls. But boy, when I tell you, it's so powerful. We're gonna we're gonna really go into it, get into it, and you get a chance to see what some of the people already in our advanced group have been making money using. So I can't wait. I cannot wait to see y'all next month. Would you like to share anything, Sean?
Yeah, this weekend it was absolutely amazing from the minute that I walked in the door. The camaraderie, the rapport, relationship building that with everyone there, everybody being on the same accord, your level of wisdom was just awesome. And the way that you were able to teach us was amazing. Everybody got it. And I saw more than just my aha moment. But it was from the Yukon, and I agree with Tanya, with Johnny B, with the Southwest thing. Everything just clicked and it just flowed. And you know, who is it? I know I've heard TDJ say this: when preparation and opportunity meet, success is inevitable. And I think that even the preparation through the Zoom calls and your leadership, I mean, success is inevitable. All we have to do is follow you, your levels of experience, your wisdom, everything. It was great. Learning how to read the charts. I'd be on a Zoom call and I would see them and I was like, okay, yeah, that's a chart. But like Tanya, Rose, and John said, to be able to be in the room and to interact and to actually see it and almost just physically put your hands on the TV to see, oh my God, I see the formation, so that, I can't even explain that in words, the experience that was. And I'm ready, I'm ready to do this full force. And I'm also ready for another training. Like, we want more, Delvin. So don't procrastinate and put it off. But thank you so much. Thank you so much.
Hey, I want to just say to you though, because I think it's important that people need to know that, Sean. I remember the day when you joined the group, and if my memory is right, it hasn't been but about 3-4 weeks at the most since you joined the group, and you just joined the group, and you getting on the plane coming all the way to Arizona. Now, if that don't show somebody who's serious about this, I don't know what does. A new person in the group, new to trading, had never traded before, don't know anything about trade. And she said, I'm doing this, I want to do this. Every time I post a chart in the room about what I was looking at, my phone rings. Every time. Somebody called me, Devin, what are we doing? That what you getting ready to do? That what we doing? Do I need to be getting ready? So I knew you was ready before you came to Arizona, but just watching you, listening and writing your notes, and I even heard a couple of times that, oh, I just had an aha moment. I heard you say it, I just had to keep on in my flow of what I was doing, but I heard you a couple of times talking to you, say it out loud. Wow, I just had an aha moment. And I just wanted everybody to know this woman just joined this group, and she was here in person, and she got it. She was saying at first, I don't really get it yet, Devin. I don't understand it, but I'm coming to this training because I want to learn this. And I saw yesterday that you really got it. I saw that, Sean. So thank you for coming out. It's been fun getting to know you, spend time together. And most importantly, I think the friends that you made an impression on a lot of people, because I've had a chance to talk to everybody, most of everybody that's been here, and they speak really highly of you. So the impression you made on the people, not me. You may not even know what you did, but you made a huge impact on the people that you met here at this event.
Well, they made an impact on me first, because I was like, I remember calling and telling my mom, I was like, this is just the most awesome group of people. And you just know when something works. So when it's divine. I think it's divine. I think everybody that was in the room, it was just a divine connection. It was peaceful. So that's how you know when something that God is in it. That's how you know.
Mm-hmm. Awesome. Thank you, Sean.
You're welcome. Thank y'all, everybody. You too, Johnny B.
Mm-mm-mm. What you got, Bob?
All right. Well, our book, Futures and Commodities 101. You guys, this is where all the lessons come from every Sunday that the mentors bring before you. They get it from this book. We do encourage you to get the book if you don't have it. It will help you learn. It makes a difference. And I say this all the time, when you have something tangible, if you can flip the pages, or you can, get the digital book and you can use it as a guide during the week, when you're not on the call. So the material that we bring to you does come out of the book. We encourage you to get it. If you've already gotten it, we are so thankful and grateful that you found enough value, from coming on the calls to even purchase the book. And if you haven't, we hope you make the decision to get it. If you have gotten it, please leave us a review. It does help us. It makes a difference. And if you're going to purchase it, please go back. Once you read it, leave us a review. Let us know what you thought. We're interested in what value you was able to get from the book. And thank you to everyone. Thank you so much. All right. Before we go any further, we must give special thanks where special thanks is due. The CME Group for their videos and education. The CME Group, that's the biggest exchange worldwide. We use a lot of their education. And also barchart.com. Of course, that's our go-to platform. They are the leading provider in real-time stock and commodities data. If you don't have a free account, go to barchart.com, get a free account. We urge you to be able to do that. It will help you keep up with the material that you learn here on Sundays and what's in the book. Bar chart is all through that book, so we want you to go to barchart.com. All right, Mr. Johnny.
All right. Tonight we're going to learn about support and resistance. We've been talking about charts, so you should know what trends are. You should know a lot of this, but do we have a video coming up?
We do.
Let's watch the video.
Support and resistance are common terms that traders use to describe levels where price is more likely to stop moving in one direction or change direction. Support refers to levels where price might reverse and move higher, or it can be a level that slows the momentum of price moving down. Resistance refers to levels where price might reverse and move lower, or it can be a level that slows the momentum of price moving up. Support or resistance are determined by the trader. Price breaks through support or resistance. These levels will reverse. Support will become resistance, and resistance will become support. For example, in this chart it shows the level of price resistance that held for over a year, where price was not able to move higher. Once this level was finally broken, price trended higher. The first retracement of the move up could only make it back to approximately the same level that the price was not able to break previously. Support and resistance can also be observed at certain price levels. For example, specific prices will create levels where price will find support or resistance, because this is where there is potentially increased interest in trading that particular market.
Mm-hmm.
And we're going to go over to bar chart, you guys, so you can see it live too when we get to that point.
Well, there was a lot of information spewed out in that little video. I hope y'all caught it. This slide deals with open interest and the total number of futures contract held by market participants at the end of the day. All right. And what is the importance of that? All right. Next slide. The number in this column represents the number of contracts traded on selected days for all CME groups, Globex, Open Outcry, Clearport, PNT, and other executions. So the importance of open interest, it really determines how easy it is for us to get in or out of a trade. Okay, next slide. All right. Open interest increases when increases when traders open trades. All right, so if I sell a contract, all right, or buy a contract, if one sells a contract, it creates a contract. Oftentimes, these are by producers or speculators. Then there also has to be a buyer of that contract. The number of open interest decrease when traders close the trade, right? A running total of all open positions in a contract, so there may be hundreds of thousands of contracts being traded for that 1 month. And it indicates the cash flowing in and out of the market, right? The volume increases every time a trade is opened or closed. So the more trades that happen in that day is what they talk about as volume. And the running total of all transactions for a futures contract for that day is included in the volumes count. All right. Hope everybody understood that. Now, these are all factors that included in what we're looking at when we're looking at a futures contract. One is volatility. All right. It's the measurement of the change in the price over a given time period, whether that's a day, 2 days, a week, a month, whatever. All right, next slide. Now, we got another video.
Another way to look at support and resistance is through trend lines. Trend lines can also act like moving averages, except they are based on the highs and lows that price makes. In this chart, we see how a trend line can act as support. In a market that is moving up, a trend line would be drawn through a series of lows in price. This creates an upward sloping line. The theory is that this line can be extended past current price and will support price as it moves back down towards the trend line. A trader can also draw a line through a series of highs that the same market has made, creating a channel where price will, in theory, stay contained. The same lines can be drawn for markets that are in a downtrend. Levels of support and resistance offer traders insights into areas where price might stop trending and retrace, or where retracements might stop and price will begin to move in the direction of the original trend. Traders should be aware that support and resistance will not always hold to the penny. Rather, they are zones that can be identified in a market which might be favorable for traders to enter or exit a trade. Support and resistance levels offer traders another piece of information they can use to assess the markets.
I want to go back to something I've always said. None of us really know which way or what the price of a futures contract is going to be 5, 10, 20 days, a month out. None of us know. But we try to use as much information as possible to try to guess which way it's going to go. We're either going to be right or wrong. Okay? As well as everybody else that's trading. So we've got to try to gather as much information as we can to try to reduce the risk of being wrong. Does that make sense? Okay. All right. Where do we want to go from here?
Where would you like to go, Mr. Johnny?
Hey, go to corn, please.
Yes, sir.
Either I was dreaming or something said something about corn going up. Looks like on Friday it went up.
Yeah. Ooh.
Yeah. And earlier in the week went up, man.
Okay. If you don't mind, can you kind of draw that sideways trough that's right in the middle? Okay. There's three types of trends that we look at. Uptrend, downtrend, and sideways trough, right? And so the top line, or excuse me, the bottom line, we've said this 100 times, is support, or what we call the floor, right? And the top line is resistance, or what we call the ceiling. So on a sideways trough, they're going to trade between those two lines. That's what he was talking about. Now, once the trend line is broken, it indicates a change. In this case, it dropped off big time. And guess what? It created a new low. Correct? What's our time frame on this chart?
Like it's
6
6 months.
6 months? All right. So from this point, it started an uptrend. This was quick, right? Um, if you want to draw your trend line on this part, okay? And then draw the upper line as well. Okay. So if you'll notice, we have higher highs, higher lows going into this uptrend, right? With the bottom line being support and the upper line being resistance. Okay. Until it broke through resistance and continued up. All right. At some point in time, it will change again. Okay.
Hey, Johnny, look like those trends kind of mimic around the same time frame.
Don't they?
Mm-hmm.
Okay.
If I can, Johnny, let me point out something right here, if I can.
Okay.
Johnny talked about volatility, and we saw, um, volatility is a big factor, something that we pay attention to when it comes to the market. I want you guys to look at this chart. Do you see this uptrend that Barbara has the trend lines on? I want to give you an example. When you refer to volatility, it's referred to in two different categories: low volatility and high volatility. Now, if you see when the trend first started in the uptrend, you see the length of the bars. If you look at the length of the bars as the trend continues on to maybe like the last week or so, you see that the bars got much longer. This is an example of when it had lower volatility and then the increase in volatility. When you see those longer bars, the market became real volatile. That's an example of high volatility, which you see over the last past week. So just wanted to make sure you understand. Look at the length of the bars, and they'll give you a good indication of the volatility, how volatile the market is. And that's a good way to kind of know what the volatility looks like from a visual standpoint. All right, Johnny. Um, if we can, are you finished with this chart, Johnny?
Yes, sir.
I know when we cover the specifications, you already kind of go over open interest and volume then. Um, but to give you an example, if we can look at corn or soybeans, um, Barbara, the uh, the price chart where we can see the open interest and volume for either beans or corn, either one.
Well, 646,000 in May and 167,000 in volume. That's what was traded. Ooh.
A lot.
Yep.
And sometimes you may go and look at these different contract money, and you may see 74, 115. That's an example of real low open interest in that contract money. But what do we want to see when we looking to get into a trade? Remember what Johnny said. So open interest means we want to have a lot of open interest when we look at getting into a futures contract. The more the better. Some people think, oh man, you're teaching all these people how to trade. You don't be so many people in the market. The more open interest in the market, the better. Right, Barbara?
Yes, that's correct.
Yeah, you want to get in the trade and be doing well, Barbara, and don't have no open interest.
No, that's happened before to me.
Tell everybody, what does that mean to be trading and there's no open interest in the contract money you trade?
It's nobody to get you out of the trade. You could be in a perfect trade, but you ain't got nobody to get you out. You stuck in the trade until it expires.
Right. And see, that goes back to another word we already talked about and covered, liquidity, right?
Exactly.
That's what open interest brings, liquidity in the market. But we don't never want to get into a contract, guys, where we don't have, the open interest there. Perfect example. My broker literally won't let me trade markets that have real low open interest. And Barbara know what I'm talking about. I've had a market I wanted to get into a trade, and he wouldn't let me. He said, nope. Them don't call me talking about Coco, man. So the point is, if you get into a trade, you want to be able to get out of it. And if your broker gets you into a trade and you in a trade with um, very low open interest, it even makes the broker nervous because they have to get you out of that trade. So that's why this is so important. Make sure we get in the market. We always make sure we have a good open interest when we get in the market. That's what we bring to the market, guys. That's why having so many little small speculators, that's why we so important. I just wanted to point that out as we were looking at open interest. And then the volume, Johnny, he went over the volume. That's very important too. When we trade, we want to have open interest and volume. To keep that in mind, remember that. You got to write that down. You always want to have good open interest and volume. And I'm sure, Barbara, we got some examples on here where we can see where there's hardly any open interest and volume on some contract months. Yep, that's not a situation we want to get in. Matter of fact, Barbara, go to S, SOFR for me. I want to show y'all something. And it might be the Fed fund I want you to go to. I don't remember. But um, what kind of open interest we got on the front month, Barbara?
Oh wow, that's 1,000,000.
1,312,000.
201.
See, you think you have any problem getting out of that trade or getting into the trade?
Not that one. You shouldn't.
The volumes, the volumes 9,300.
Volume ain't the volume don't really match the open interest though. But
But when the market open, it will. But guess what? Imagine this now. We said that open interest was 1 million and something. How much y'all think the margin is to get in the contract with this? Matter of fact, let's see the Fed fund too, real quick, Barbara. Let's see the Fed fund. What the open interest is for the Fed fund market. What did the open interest say, Barbara? It's on that second line right there. No, it's not on the second line. Which one is it? It should be right there where you was at, though.
315,000.
315,000. John, how much you think a contract, a margin for a contract would be for a market like this?
Well, it's saying it's only 240 to margin 247.
But well, I know Johnny's gonna probably be asking you in a second. And how much would that contract be controlling? What's the contract size?
5 million.
5 million. 5 million.
All you need is $247 to control 5 million. Is that what you're saying?
That's exactly what we're saying.
That almost don't make no sense.
It don't make no.
No, it doesn't.
Yeah.
But
Imagine
look
that.
at the movement.
Mm-hmm. Yeah, I remember when Johnny talked to us about the fact that the leverage that we have when we trade in the market, how much money you would have to have if it wasn't for the leverage.
Mm-hmm.
Right.
Yeah. $200 controlling that big of a contract.
Wow.
But here's the thing that you need to think about. How much is the typical movement? But look at the point value. For every point equals $4,167. Right?
Right.
So every time it moves a point, you either make or lose 4,167. Okay. But how much is a point? Right?
Mm-hmm. 4,167.
As it relates to the 5 million, right?
Mm-hmm.
So a tick size is 0.0025, which equals $10, 1041. All right.
Mm-hmm.
So let's look at, can we see what the high and low was on the previous trade? Or
Yeah, go back to the price graph. I think this market is open trading. If it is, Johnny, we're not gonna be able to see the high and the low on the previous day.
well, the open, high, and low, see, it doesn't move but a fraction of a penny.
Mm-hmm.
Okay. Unless something really stupid happened and it moves a bunch.
Does anyone know what Johnny's referring to about something stupid happening? Does anybody know what this market trades off of? My point. Without Googling, what does the Fed fund trade off of?
I'm not sure.
Congress. The
The
president.
government. Yeah, I was gonna say the government. Yeah, the president.
It's an interest rate market.
Interest
Oh,
rate.
interest rate. Okay.
So if they raise the interest, a quarter of a point, right?
Mm-hmm.
That's going to change. See, these guys are betting whether or not the Fed is going to raise interest rate or lower interest rate.
Oh, okay. Okay.
Now, what does that mean to us, or what does it mean to the producers and the commercials? If I'm a bank and I'm sitting on a whole bunch of money, right?
Mm-hmm.
And I'm afraid, here's what's crazy about interest. When the interest goes up, you think you're making more money. Okay.
Mm-hmm.
When the interest goes down,
You
you
think you're
think
losing.
you're losing money,
Mm-hmm.
right?
Yep.
But if I own something at 5% and it goes to 4, I got 1,000, I got 1 full point that I can trade off to somebody. Because for them to buy another interest-bearing account at 4%, they're giving up 1%. So
Mm-hmm.
when the interest, it's kind of inverse of what the way you would think the market goes. Because if I'm buying something with a low interest, right,
Mm-hmm.
and the interest goes up, I got to come up with the extra money to sell it to somebody because they want the higher interest rate, because that's what the market is. So that means I lose. So if the interest rate goes up, I'm losing. If it goes down, I'm winning. Correct, Delvin?
Correct. Correct. Now, Bob, I want to show another example of open interest and volume from another perspective. Can you go to livestock and either go to milk or cheese?
Yes.
Now y'all remember the numbers we just looked at, right?
Mm-hmm.
With the SOFR and the Fed fund. Now I want you to take a look at these markets. See the difference in the numbers?
Yep.
Yes.
Which one is this, Bob? This
Milk.
cheese
Milk.
milk or this milk? You see how how different the numbers are with the open interest and volume now?
Mm-hmm.
Very low. Yep.
Can you click on that and look at the specs? Look at the specs. Where we could control $5 million in one
Mm-hmm.
market with 250,
Mm-hmm.
right?
Mm-hmm.
With milk, we're controlling 200,000 pounds of milk with $1,100.
Yeah.
Yeah.
And each point that it moves is $2,000.
Everybody's seeing the leverage that we've been talking about.
Mm-hmm.
Clearer and clearer.
Yes, sir.
Yes.
Yeah. You get into one of these contracts, you might be controlling more milk than your local supermarket.
That's so true.
Yeah. But the thing is, just know that when it comes to open interest and volume, we want to see more not less. That means we have an opportunity to get in and out of the market with no problem. That was the main thing.
Mhm.
And with the volatility, you just know that the longer the bar, the longer the candle, or the shorter the bar, the shorter the candle. This indicates the volatility of the market. Okay. Um, did everybody clear on support and resistance? Do we need to look at any charts? Everybody understand support and resistance?
Yes.
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 Yep.
Okay. All right.